Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 3:15 in New York. It is Monday, December 14th, 2015, and this is the Daily Report for Gold and Silver. We do have the precious metals complex under pressure today. Gold trading off about $9 on the day, ticking away between 926, 933 in that area at 1065 in change. We've seen it trade to a low of 1063.40, so we're just a couple dollars off the lows, and the high 1077.54. Silver also trading lower on the day, currently off about 20 cents, well below $14 at 1369, 1370 in that area, low 65 and change, and the high just below $14 per ounce. So traders, as you know, we are going into this week with a short position in gold. We went short roughly at 1078. Market currently trading around 1065. We are looking at a standard candlestick chart, but this standard candlestick chart does have a basic long-term fib retracement, and I'm looking at resistance levels, obviously not support, because the bottom of this particular fib retracement is at the low, which comes in now at about 1045, up to this high, which comes in roughly at 1190. So it covers this entire range. And so there's no information, obviously, that we can glean from something this short term in terms of different levels of support. But in terms of resistance at this point, we can see this one mark here, 1077. And when we take a look at the most recent highs that we've had, both today, which is these two bars here, as well as Friday, you can see that only for a short time did we actually dip in this area. So I truly believe that this area, call it 1077, 1078, really our entry point, should be resistance in this area, and we'll probably look to trail our stop down just above that point. That's my current thinking. Now, when we look at this chart, the other thing that really sticks out, we'll have to really go ahead and blow this up, but you can see that over these last three cycles, and again, these are half a day candlesticks, but we've seen this market come from the high that it had up here, which was around 1080, and basically drift lower. And each cycle, except for this one here, has actually made a lower high. But on all three of these last cycles, we have made a lower low. And we're just trying to see if we can come in and match this low, which sits at around 1062. So traders, as we get closer and closer to the end of the year, there's no doubt that I'm putting together my outlook for next year. And in fact, we will film that over at the Street Studios on the 23rd, meaning next week, and come out with my 2016 outlook. But just to give subscribers kind of a heads up as to what we're looking at, really have to go to our long-term chart. Now, this is a daily chart, simple line chart. I want to look at areas, and this line chart, I believe, is based upon the close. On a line chart, you can't have open, low, high, and close. And I also have a linear regression, which in essence is simply a bear channel. And when we look at the bear channel, and there's no doubt this is the market that we've been under and the influence, we take a look at how this market cascades lower. And in terms of realistic support, long-term support, when we look at the fib retracement, of course, on this, once we broke through a critical point, and that was really 1084, I'll have to show you that on another chart, 1163 on this chart, and this chart is really starting from down at 700 up to these tops at around 1900. Again, these are based upon closes. That's why you don't have a close over 1900. But there's no doubt we have the real potential over next year to actually go and trade to $1,000. That's what my midpoint is telling me on this particular chart. So traders, this is another long-term chart that I am working with. And what you'll see here is kind of interesting because I really have to compress the chart for you to see where this time cycle starts and where it ends in terms of the fib retracement. It's the longest of all retracements. And when we look at it, we're coming back to 2001. Gold is trading at $250 an ounce, up to the record top at 1918. So it incorporates this entire move up because we're trying to see the validity if any, that we can either point out a bullish model or a break from that bullish model to a bear model. And I draw your attention to this 50% retracement. And this 50% retracement comes in at 1084. Now we have a harmonics here because I also have another fib retracement that starts from 540 after the market moved up, comes in, hits about 700 and comes back down, and that goes up to this record top. And when I do that, we get another level, which is a 61% retracement. That comes in at 1067. So considering the fact that we have 1084, 1067, market's currently at 1064, there's absolutely no doubt, and it's one of the primary reasons that we initiated a short in the market, is that a real break below this point could signal really a major move down, and the move down that I would look for again is about $1,000. Now this $1,000 is not based upon a fib number as much as it's based upon these series of tops and the breakout above 1,000, because if you recall back in 2007 to 2009, the market flirted with $1,000 on a couple of occasions. Let me switch my pointer here. Market comes up, I believe here, we get our first 1,000, comes back down, tests back to 700, which correlates to this top. So former resistance now becomes support. Market comes up, you've got, well, this occurred before that, but you've got two more occasions that the market comes in and tests this level before breaking out and moving higher. Once it moves higher, it moves up to about 1,200. Then it comes down, and again, it uses this particular area as some sort of support. And this area, of course, is the current area that we're at, which is 84 to 67. So the fact that we have broken far below that is significant. Traders, we want to maintain our current short position and maintain our current stop. As I said, let's see how this market moves. We got the FOMC meeting kicking off tomorrow, so we could get some increased volatility, which is the one rationale I have for leaving the stop where it is. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday. Bye-bye.